This is Nightly Business Report with Bill Griffith and Sue Herrera.
Fixer-upper Home Depot crushes earnings estimates and raises its full-year guidance as do-it-yourselfers spend a lot of money to spruce up their homes.
Modern bank heist. The FBI warns that millions of dollars could be swiped from ATMs around the globe in a matter of hours, and it could happen soon.
Restaurant revival, the return of the ultimate power lunch. Those stories and more tonight on Nightly Business Report for Tuesday, August 14th.
And we do bid you good evening, everybody. Expectations were very high for Home Depot, and the Dow component did not disappoint. First thing this morning, the world's largest home improvement retailer released earnings that easily surpassed estimates, and it also lifted its outlook for the rest of the year. Homeowners, it turns out, are spending a lot of money to modernize their homes, thanks to a strong housing market and an improving economy. But despite the strong report, shares fell today, which is typical of Home Depot stock when the company does beat analyst expectations. Courtney Reagan takes a look now at what's going right for that retailer.
The housing market may be starting to raise some concerns, but there's no sign of those worries in Home Depot's latest earnings report. The home improvement retailer posting its highest earnings and sales in company history and increasing its full-year forecast. U.S. comparable sales grew more than 8%, the best in 9 quarters, thanks in part to record sales for garden equipment and pent-up demand from an unusually cold spring.
What we see in this report today is when the weather cooperates, as it did here in the fiscal Q2, people shop at Home Depot.
The home improvement retailer's chief financial officer, Carol Tomei, says the housing market is tight with only 4% of homes turning over in the U.S. The 96% of homeowners that aren't selling their homes, though, make a good market for renovating, which is great for Home Depot. Interior paint had its best first half in 5 years. Painting is an easy upgrade for homeowners looking for a refresh.
The underlying trends in the business are very good. People are spending on their homes. We've continued to see that now for several years, and we don't think that really is going to end.
All departments except lighting saw sales increase. Lighting was the only department to see sales fall from LED price deflation. Sales to professionals like contractors again outpacing sales to do-it-yourselfers, with merchandise priced above $1,000 now making up 20% of Home Depot's total sales. While online sales make up just a small portion of Home Depot's total, it is growing, up more than 25% in the quarter. Plus, just under half of all online orders are picked up in store, with 1 in 5 shoppers adding something to their cart when they come in to pick up their orders.
Most people that go to Home Depot, they're working on some project, they need that consultation. And I think that's a real key, what keeps people coming to these stores. And I think Home Depot has been very, very smart to invest aggressively in the service in their stores to help them.
There are inflationary pressures pushing up costs, including rising raw material costs, transportation costs, and tariff costs. But Home Depot says the size and scale of its business makes it manageable, at least for now. For Nightly Business Report, I'm Courtney Reagan.
Joe Feldman is back with us. You just saw him in Courtney's report. He's going to tell us more about Home Depot. He is the Senior Managing Director at Telsey Advisory Group. Joe, good to see you, as always.
Thanks for having me.
Was there anything in this report that disappointed you? It seemed pretty solid, as Courtney outlined, in almost every sector.
Yeah, it was really strong across the board. I mean, all product categories, all regions were strong. Seasonal categories were good. The pro customer continued to grow at a faster clip than the DIY customer. And pro is now 45% of total sales, which is really important because that helps drive the average ticket. Transactions improved after having been down in the last quarter. So we saw very good results in this quarter.
I know we highlighted how Home Depot stock was down today, but I noticed that Lowe's, its main competitor, was much higher today. Maybe somebody's expecting them to come in with a similar report. Are you?
Yeah, we think Lowe's is going to have a very good result as well. We're modeling same-store sales of 5.5%, so we think there'll be very strong growth. Not quite the 8% that Home Depot did, but still very good results. And I think there was some concern that Lowe's might take down numbers for the back half of the year. And after seeing this report, I think people felt a little more comfortable that it should be a pretty solid year overall.
Are they positioned to withstand some of the inflationary and or tariff pressures that Courtney mentioned at the end of her report. Lumber prices have been skyrocketing. Yeah. Labor costs have also been going up for them.
No, that's absolutely true. You know, both companies, but Home Depot in particular, has been really working hard on labor productivity initiatives within the store and trying to really refine how they use labor and with the hours and making sure there's enough customer-facing labor at the right times. That's one thing. Commodity costs historically in the home improvement industry can be passed on pretty quickly. You know, the purchasers of those commodities don't love it, but you know, if lumber prices go up a little, they have to pay a little more. When it goes down, they pay less. Mm-hmm. So you do get a bit of that. As far as tariffs go, the companies have told us that they're working on ways to manage through that. And given that it is a relatively low penetration of their overall sales, it shouldn't be too much of a drag on the overall business for at least Home Depot and Lowe's.
Joe, thank you so much. Appreciate your perspective. Joe Feldman with Telsey Advisory Group.
To Wall Street now, the Dow snapped a 4-day losing streak today. Tech and bank shares rose as investors shrugged off concerns about Turkey's ongoing currency crisis, at least for today. The industrial average rose 112 points to 25,299. The Nasdaq was up by 51. The S&P added 18.
Despite today's stock market gains, a number of Wall Street banks are sounding cautious. Goldman Sachs recently said that an escalation of trade friction could result in a drop in earnings, which could, in turn, push the benchmark indexes lower. Morgan Stanley warned about investor complacency.
And then just today, a Bank of America Merrill Lynch survey said that despite bullishness reaching levels not seen since 2015, the peak may indeed be near. Even the Congressional Budget Office lowered its forecast for economic growth for this year, citing uncertainty from widening tariffs. So how cautious should investors be right now? Let's turn to Barry Bannister. He's head of equity strategy at Stifel. An awful lot of crosswinds going here, Barry, with everybody convinced that we may see a correction sometime next year. What do you make of that?
Yeah, there's a good chance of that. If you look at the broader S&P 500, an important market index, it's actually still below where it was on January 26th of this year. Hasn't made a lot of progress. We've had strong earnings, to be sure, but what's called the price to earnings multiple, the ratio of price to earnings, has fallen while the earnings improved. So we've had a market that's really flat year to date.
You also mentioned the fact that the market's view on interest rates is basically well below the Fed's rate view. How much more aggressive do you think the Fed is going to have to be?
Yeah, the trouble for the Fed is they don't really have any good choices. They have to cross an interest rate that's going to undermine some of the Wall Street speculation before they get to a rate that is consistent with what's called the dual mandate, which is low inflation and full employment. So we speculators need a certain rate, a very cheap rate, and what the economy needs is a bit higher. It's also pressuring emerging markets, as you clearly see, because as the dollar gets more scarce, it's harder for those people who borrowed in dollars overseas that have no control over the currency to pay back their debts.
You know, one thing working against this bull market we're in is the length of time. We haven't had a bear market in almost a decade at this point. What would be the catalyst, though, do you think, to end this bull market?
We've had a couple of close calls, Bill, in terms of a bear market.
Right.
We came close as recently as late 2015, early 2016. So we've seen weakness, and we've seen weakness in the economy. What's called nominal GDP, which is the real growth plus the inflation rate, actually bottomed out in early 2016 at a level consistent with past recessions. So usually to cause an actual bear market, you either have to be looking at the conditions that could cause a recession or you actually have to be about to have a recession. And the Fed's going to have to raise rates a bit more before that's a risk. But what I do see this summer is a correction or pullback as some of the earnings estimates come down because the dollar is strong, emerging markets are weak. You're also going to see the Fed, I think, a little more hawkish than the street would like to see in terms of raising interest rates and a number of other negative factors. So summer is a tough time through October for the markets.
We will see what happens. Barry Bannister with Stifel. Again, thanks for joining us tonight.
Thanks, Bill.
Well, with all of the focus on trade, today we learned that the cost of imported goods was flat in July, but that the annual rate increased to its highest level in 6.5 years. According to the latest government report, higher oil prices are behind the push higher, but economists say tariffs imposed by the White House could add to costs unless the trade disputes are resolved soon.
Meanwhile, total household debt is now higher than before the financial crisis. According to new figures from the New York Fed, household borrowing reached more than $13 trillion in the second quarter. It was driven by auto and mortgage loans. The good news, though, is the borrowing has not been accompanied by a rise in delinquencies, which still remains low.
While the U.S. economy is expanding, the Chinese economy is cooling, and the direction of the world's second largest economy could impact investors around the globe. Eunice Yoon is in Beijing tonight.
Chinese authorities said that the economy remained steady in July, but the numbers did miss expectations and also indicated a further slowdown in the economy. Now, looking at the numbers, year to date, China's fixed asset investment growth dropped by more than expected to 5.5%. Industrial output remained steady at 6%. Retail sales posted slower growth at 8.8%. This is down from 9% in June. Now, the weaker data is already prompting authorities here to indicate that they favor pro-growth policies. The Stats Bureau said today to expect infrastructure investment to pick up in the second half. This is as part of the government's overall policies to try to support the economy. The official also added that China faces serious, complex external and domestic environments, and that China needs to assess the impact of its trade frictions with the United States. So even before the trade conflict, there's been a debate going on here for months as to whether or not China would want to continue with what we've been seeing recently, which is a clampdown on financial risks and a rein-in of rising debt, or if there would be a reversal in policy to be much more supportive of the economy. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Time to take a look now at some of today's upgrades and downgrades. We begin tonight with Urban Outfitters, which was downgraded to neutral from outperform at Baird. The analyst says that the stock is now fairly valued after nearly tripling over the past year or so. Price target now $53. Nevertheless, that stock continued to rise, up about 3% today to $48.74. Marriott was upgraded to outperform from market perform at Raymond James. The analyst calls the recent weakness in that stock a buying opportunity. Price target $140. The stock rose nearly 1% to $121.61.
Salesforce's price target was raised to $178 at Morgan Stanley. The analyst calls the company the vendor of choice for the digital transformation. The rating on the stock remains overweight. The stock rose more than 1% to $146.57. Square's price target was raised to $86 by Nomura Instinet. The analyst says downloads of Square's Cash app exceeded those of PayPal's Venmo app for the first time in July. The rating remains a buy. The stock rose more than 3% to $74.97.
Still ahead, a small business owner caught in the middle of Turkey's financial crisis. Optimism among small business owners is now at a 35-year high. That's its second best level ever. And that's important because Main Street businesses are certainly considered the backbone of the American economy. Kate Rogers explains now what's behind the upbeat mood.
Small business confidence is continuing to rise in the face of an increasingly strong economy. A new survey from the National Federation of Independent Business shows optimism is near record levels, with most owners looking to hire more workers to keep up with strong demand.
Well, right now the economy is doing very well, and that translates into a lot of demand for the output that small businesses produce.
But a stubborn problem remains, finding qualified workers to fill roles. Labor quality is the top issue for small business owners, outpacing both taxes and government regulations.
We've seen that the ability to find good workers, especially skilled workers, rising as a concern and a problem for companies over the last few years. It ebbs and flows, of course, with the economy. And whenever we've seen the economy really humming along like this, keeping the right kind of workers in your business really becomes one of the chief challenges.
And as the labor market continues to tighten, wages are increasing. That's part of the reason small business owners are raising prices.
The problem that we face now is that with a tight labor market and no supply or a little increase in supply, we are now, if I succeed in hiring somebody, I'm going to create a vacancy someplace else. So we're not going to be able to eliminate the vacancies unless we get an increase in the participation rate in the labor force.
So while Main Street is feeling good about its economic prospects, it's also dealing with the pros and cons of a strong economy. For Nightly Business Report, I'm Kate Rogers.
But it is a different story for business owners in Turkey who suddenly find themselves dealing with the fallout of their country's financial crisis. Willem Marx is in Istanbul for us tonight.
Sertan Kavush opened his first Istanbul restaurant a decade ago. Today he oversees 10 burger joints in a city that's better known for its kebabs. But extending this franchise further will have to wait, Kavush told me, thanks to growing economic uncertainty.
Dollar-euro currency is a little bit high, and of course, like everyone, we have little problems. But what we believe, everything will be passed.
Many business owners here long ago learned to hedge against currency risks. But the lira's latest lurch downwards has even raised the cost of building the perfect burger.
We're using Turkish products, we're using Turkish beef, we're using Turkish potatoes and many things. But the feed of the beef is coming from out of country. It's make a cost for us, for everything. It's a connecting.
This nation has long stood at a geographic crossroads. But after years of growth, its government now faces immense pressure to choose a new economic path. So far, Turkish authorities have resisted calls to take a bite out of inflation by raising interest rates and have instead blamed foreign interference for their financial woes. And this reluctance to act means entrepreneurs like Kavush must make their own difficult decisions about the future.
Am I worried about it? A lot. I mean, before I could see 6 months, 1 year later, and I have a business plan. Now I prefer to wait.
But today, President Erdogan told Turks, and in particular Turkish businesses, they should not postpone investment decisions, just as they should not transact in foreign currencies. To do so, he said, would be like giving in to the enemy. And based on his recent rhetoric, these days, this country's greatest economic enemy seems to be the United States. For Nightly Business Report, I'm Willem Marx in Istanbul.
Tapestry bags strong earnings, and that's where we begin tonight's Market Focus. The luxury fashion company, formerly known as Coach, posted quarterly results ahead of estimates thanks in part to strong sales of its Kate Spade handbags. Tapestry CEO said today that the death in June of the brand's namesake founder fueled nostalgia for Kate Spade products, and that helped sales. Shares of Tapestry rose 12% today to $53.16. Meanwhile, Coca-Cola is buying a stake in sports drink maker Body Armor, and Coke has the option of increasing its stake in that future. The Body Armor is a startup backed by several athletes, including Kobe Bryant, just the latest company looking to topple longtime industry leader Gatorade. Shares of Coke were up 6 cents today to $45.89.
Advance Auto Parts topped Wall Street sales and profit estimates for the most recent quarter and lifted its full-year revenue outlook. The auto parts retailer cites improving industry trends and increased spending per transaction. The company also announced a new $600 million share buyback program. Stock popped 7% to $156.13. Cigna's deal to buy pharmacy benefits manager Express Scripts will no longer be opposed by the activist investor and Cigna shareholder Carl Icahn. That follows recommendations by advisory firms ISS and Glass Lewis that shareholders vote in favor of the deal. Icahn, though, maintains that the deal is, quote, wildly overpriced. Shares of both Cigna and Express Scripts rose. Cigna closed at $185.30, Express Scripts at $86 even. Tesla's board named a special committee to evaluate taking that company private. This follows recent tweets from CEO and founder Elon Musk, who said he wants to take Tesla private at $420 a share, and that funding was, quote, secured. But there are reports that the SEC is looking into the accuracy of Musk's statements. Shares dropped more than 2% to $347.64.
The FBI is reportedly warning banks about a potential worldwide ATM hacking scheme. According to a cybersecurity blog, hackers can use malware to access a bank or payment card processor to steal data and then use that stolen information to withdraw large amounts of cash from ATMs worldwide. Charles Henderson is global managing partner with IBM X-Force Red. This is a team of so-called white hat hackers who help companies uncover vulnerabilities in their own security systems. Charles, thanks for joining us tonight.
Thank you for having me.
Is this a new vulnerability we're hearing about? What do you make of this warning from the FBI?
So, at its core, the FBI is addressing a lack of care and feeding in the ATM world. If you think about all the things that banks have had to secure and have been focusing on, such as networks, applications, any number of things, they've been ignoring the ATM security posture for some time. They've been treating it like a magic box, and that ignoring has come home to roost. And the criminals are now targeting ATMs because they're vulnerable. They haven't been tested.
So is a hack imminent, do you think? And what types of banks might be the most vulnerable? The big guys like the JP Morgans and such, or smaller banks?
So you have to remember, at its core, let's take a step back. Let's put ourselves in the shoes of a criminal. Criminals want money, and it just turns out that cash monetizes extremely easily. So they're going to attack ATMs with accounts that have a lot of money, and they're going to raise the limits for the withdrawal of those accounts so that they can get the highest return on investment in one action. Think about it this way. Criminal enterprises are business not unlike any other, and they're trying to raise their ROI.
Right. I can hear the people at home thinking, okay, now hopefully banks are doing something about this to improve their security, but what should I be doing with my bank accounts here? How safe are they?
So there's really sort of a two-part scenario here. First of all, the onus mostly falls on the banks. The banks need to shore up the ATMs. They need to conduct dedicated testing programs against the ATM. And when I say testing, I mean penetration testing, right. The kind of work that X-Force Red does, which is test these so that the first time they're tested, it isn't a criminal. The other thing banks need to do is monitor accounts for out-of-the-ordinary withdrawal patterns, as well as out-of-the-ordinary patterns in the daily withdrawal limit. Now, for consumers, even though it's not their responsibility per se, there's a couple things they can do to
Very quickly, if I can, Charles.
Make sure that they're taken care of. One is look at their account, make sure that they're monitoring the charge history. They should be doing that anyway. The second is call the number on the back of the card and investigate their daily withdrawal limit. Make sure it's acceptable.
Be vigilant, that's for sure. Charles Henderson with IBM X-Force Red. Thanks. Appreciate it tonight.
Thank you for having me.
Coming up, a restaurant revival, the first look at the return of a famed dining institution.
A landmark restaurant is making its return tomorrow at noon. The Four Seasons will open for lunch for the first time in 2 years, and while the name is the same, a lot about it will be different. Robert Frank is in New York City for us tonight.
It is the day the hungry New York elite have been awaiting for 2 years, the return of the Four Seasons restaurant. Tomorrow, lunch will be served once again at the new location of the Four Seasons, the iconic lunchroom to billionaires, finance kings, and titans of media and politics for nearly 60 years. Regulars include Henry Kissinger, Martha Stewart, and billionaire financiers like Steve Schwarzman and Mort Zuckerman. In fact, Pete Peterson and Steve Schwarzman founded their firm Blackstone over lunch at the Four Seasons in the mid-1980s. The old location, in the Philip Johnson-designed area of the Seagram's building, closed in 2016 after a fight with the landlord. Today, it reopens a few blocks away with a new $30 million shrine to eating, drinking, and deal-making. Getting a reservation will be nearly impossible for mere mortals, but we are the first cameras allowed inside.
It all starts here with the sunken bar made from 24-karat gold leaf and molded glass. The windows are covered with a shower of crystal beads, each of them hand-painted and hand-blown from an artist in the Czech Republic. You then proceed through this mysterious tunnel called the Passage, which is made from perforated bronze and that plays the recorded sounds of the wildlife in Central Park for each of the 4 seasons. And then you arrive here at the main dining room of the 4 Seasons, 33 of the most coveted tables in New York City, all of them surrounded in mid-century modern elegance. There's a new executive chef. The new pastry chef comes from the White House, but many of the old dishes make a comeback, including the famous Dover sole and the carved duck. Upstairs is a private dining room and an invitation-only champagne bar. To pay for their new space, dozens of Four Seasons customers invested between $250,000 and $1 million each, in part to make sure they get a table. The billionaire Bronfman family is also a longtime partner.
The space is brand new,
right,
but the feeling is the same. And the feeling is even more intimate than before. And it's really comfortable. We had a few dinners for friends and investors last week, and they stay forever because it's so nice to be here. It's warm.
Even with all those investments, they're going to have to sell a lot of Dover sole to make back that $30 million. For Nightly Business Report, I'm Robert Frank in Manhattan.
Wow.
Can't wait.
Can't wait. That does it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.